Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. I've been away for a few weeks at conferences detailing technical analysis of markets, so it's nice to come back and actually do some technical analysis here in sugar. Looking at this daily chart afresh, the past key influential feature here, the late April to late August descending expanding wedge pattern, is no longer a market influence, including its topside target. The one feature that still remains is the neckline, which is highlighted in bright red on my daily chart, and that's of the August to November 2021 complex triple top. That's currently at 23.85. This is at the moment just above the market, near the 50% Fibonacci line of the March to October move at 24.08. However, this is just part of what may be a main new, at least new to my writing, main new pattern. A large late June to date bump and run reversal top. It's not a great example of such a pattern, but it does have some merit and is pretty far advanced such that we are in the run stage of this pattern. Not only that, but the hesitation formed late last week between 23 even to 24 even, well, that does fall in line with the idea for this pattern. So what next? Well, the neckline in bright red acted as a de facto lower trend line for the bump and run reversal top. So we're into the next phase by being below it. The question is whether we will see further declines, and if so, by how far? Or if we see a further resurgence back up. At the moment, with all the ammunition sitting overhead, from September to date, it still looks like we may have a further attempt lower, down to the combined congestion in the 22.35 zone, and then down to stratified support starting at 21.48 that stretched down to 19.64. In amongst that stratified support, we have the April 2020 to date uptrend, currently at 21.42, and just below it the April 2021 to date uptrend, currently at 19.50. Meanwhile, topside, beyond the 50% Fibonacci line, we have the 38.2 absolute Fibonacci line at 24.88, and the very slowly rising long moving average, currently 24.94. Now, going back to the possible large bump and run reversal top, if we utilize the neckline as the trend line for this pattern, then the theory suggests a move down to the primary target X below in the 21.85 zone, and a secondary hard to reach target X1 down in the 19.35 zone. Ice Europe, white sugar in London. My time attending and speaking at conferences has given me the opportunity to look afresh at these markets. Today, and a lot has changed here. The break higher over the upper trend line, highlighted in dark blue on my daily chart, that's currently at 681.90, back in late August, of the late May to late August expanding wedge pattern, set the stage for the next move higher. But it wasn't an easy delivery. This was a multi-pattern move, as the upper trend line was also the neckline for the late May to late August reverse head and shoulders pattern. The primary target for the expanding wedge pattern was in the 769 area. That was reached, but the secondary hard reach target up in the 797.30 area, and that was not, and has been retired. At the same time, the primary target of the reverse head and shoulders pattern was reached in the 754.20 area, but here also the secondary, harder to reach target up in the 784.90 area was not, and has also been retired. The other notable features were the mid-September to early October dip, forming a reverse head and shoulders bottom, with both targets reached on the top side for that, as well as the formation of an ascending wedge pattern between mid-October to late November. This had been breached on the upside in early November, which will shortly become very important, before breaking lower in late November and falling away below the dark blue trend line and dipping into congestion, starting at the rising long moving average, currently at 690.80, then at 685.90, the March 2012 high at 674.90, the July 2012 high at 663.70, and the 650 to 652.20 area that contains the 50% Fibonacci line of the January to September 2023 move at 652.20. We have further congestion below at 635.30 and 6 to 638.20, and then stratified supports between 625.30 all the way down to 602.70. Right, the key feature here that has been created, or rather the final part has been created, and I said this was going to be important, we're going to come back to this, and that was created by this move lower, and that is the late August to date double top. Now the market has broken down through the neckline of this double top. For guidance, I'm using the lesser Fibonacci line at 679 even as a proxy for the neckline. This break lower would indicate the following potentials for such a double top pattern. A primary target X down in the 628.30 zone, and a secondary hard to reach target X1 down in the 585.10 zone. Now it's all very well placing these targets below on my daily chart, but please still bear in mind there is a lot of congestion below, especially in the previously mentioned stratified band between 625.30 and 602.70. Sugar white premium spread. We're in the last month of 2023, and this chart continues to be one of the busiest and most colorful of all my charts. Many things are still going on, all at the same time. Okay, so I'd previously spoken some while ago about two big picture items I'd seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently at 120 3/4, and the middle time above, currently at 195 even. I've said this so many times before, and I'll keep repeating it here yet again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. Next, we have an ascending expanding wedge pattern highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, currently 215 1/4, so right off the top of my weekly chart. To me, it was and still is not the best looking of such wedge patterns, but it is also still out there, and it comes with all the possibilities such a pattern invokes. Then there's the more recent activity, and this had seen prices around through and on occasion all the moving averages. Notably the long moving average, which is 130 3/4, and the medium moving average currently at 140 1/2. We have seen activity push prices down through the two 50% Fibonacci lines at 128 3/4 and 131 1/2, as well as the June 2020 high at 134 even, then move back up through all of them and up to the 2013 high at 152 3/4 before ending up back in between them. We've also seen the island gap below between early April to early November this year reach up to a few weeks ago to the top side target of the 152 the 152 area for this pattern, and that was done a few weeks ago. I suppose it all still depends once more on what the market does with the overhead 2013 high, because beyond that we have the neckline currently at 159 1/4, highlighted in pink on my daily chart, the June 2021 to May 22 reverse head and shoulders bottom, before we hit the congestion between 162 3/4 and 165 3/4, and that contains the 2012 high made back in July that year. Now, many months ago, I drew a bullish shift pitchfork for the August 2021 to February 2023 action, and I've once again decided not to highlight it, as with already so many highlighted trend lines here, the action on this pitchfork neither adds nor subtracts from the current overall picture at this time. The next point I'd like to discuss is once again a previously discussed big picture item. Let's look once more at the whole of the 2022 today action as a possible huge lopsided diamond top, out of which prices have emerged during the summer. This is the pattern that's highlighted in green on my daily chart. Now, we initially had a false break higher from this pattern, then recently a false break lower, and so far the market has still not decided as to which way this pattern will drive us. Last time I began to have doubts about this whole idea, and I can see myself retiring this pattern completely unless we see some progressivity in one or other direction, but my natural conservative nature is halting me from doing that.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.